Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to the show, Bob.
Yeah, good morning, Jim. Good to be with you.
We'll let you know right up front, too, that we have a couple of questions from a listener in Belgium that seem to be quite relevant to what's going on today. But first of all, we've seen the price of gold drop $12 in one day. And is this related to what's happening to the U.S. and Canadian dollars?
Yeah, the U.S. dollar has been under relenting pressure, and in late June we looked that it could go down to maybe the 92 or 93 level where it is. And ironically, on our technical work, to get a signal that the decline is ending and therefore we'd have a buy, is that the U.S. dollar has to stay low today to the close. Or if it rallies, we don't want it to rally too much, and then we get a clear-cut buy signal on it. And it seems to be just a market change. You've had the dollar index oversold, and contrary there, you had the Canadian dollar up into the 80 and quite overbought. So a reversal is appropriate, and we just want to get a technical reading in on a weekly number, which means Friday close. So we'll see how it does during the day here. But a reversal to a firming U.S. dollar would be dislocating to a lot of markets. For example, where you've had the Dow, the senior indexes making record highs, if you adjust it for the currency depreciation, you wouldn't be making highs. So a lot of it is the currency play. And then, of course, with the U.S. New York market doing well, then everybody gets excited in Europe and London. So, yeah, it's going to be an interesting day here. And then we can talk next week about how it concludes and whether it makes the turn or not. But a turn to a firmer U.S. dollar is highly probable.
Donald Trump, of course, takes credit for the Dow hitting a record high. He sure didn't seem to think that President Obama had nothing to do with the climb of the U.S. stock markets out of the recession of 2008.
Well, I don't know what he said about that, but the market is called, they've been calling it the Trump phenomena, the Trump bull market, or whatever any name is possible. But on our technical work, we have a signal called a springboard buy, where you get a sharp drop down, and that gave us the buy on the stock market on November 3rd, and the results of the election weren't until the 9th. So a reversal in the market was already set up, and then the prospect of a pro-business administration is really exciting for a whole bunch of investors and research analysts who've seen with the Obama administration the most obnoxious and intrusive administration in U.S. history, at least since back to the Roosevelt days. So Trump win has had a lot to do with the rally since. It gave our springboard buy model gave another buy in the middle of April. So, hey, life is good.
With the price of gold going down, someone said there's a lack of geopolitical action to drive the price up. Well, what about North Korea? What about Venezuela? Aren't they kind of active?
Well, there is a school of thought that thinks that gold moves on big political or what you call it, whatever moves, but that's a day event and not to be really considered for. Let's put it this way: it's an exploration for a move in gold by those who don't know gold. Now we have a question,
and we'll get to those questions right after the break.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Welcome back. We're chatting with Bob Hoye. Bob, yes, 2 questions from our good friend Frank DeBeer. I'm sure we're just slaughtering the pronunciation of his name, but we are sure his first name is Frank. He writes, Bob, in his memoirs, Herbert Hoover wrote that the Great Depression did not really start until April 1931 when Europe collapsed. He wrote, and I quote, the great storm center that is in Europe, that storm moved slowly until the spring of 1931 when it burst into a financial hurricane. Is that an accurate assessment?
It is, but actually the Depression started the moment the stock bubble ended in the summer of 1929. If you look at the EMB, the National Bureau of Economic Research, who is the body that keeps track of recessions and depressions, the stock market in New York peaked in September, and the recession started in that August. So when you're at the end of a financial bubble, when it fails, the recession starts immediately. And because it was a great bubble, you knew that a Great Depression would follow. But Hoover, of course, didn't know that when he was writing his memoir. But then, nor did anybody else, because who was doing, serious business history at that time? So here's the way it works. Bubble, top, the start of bear market, start of Great Depression. And but what then you had the crash, the stock market crash went down to, and it had some stability in 31. But what really pushed it off, in as far as the news department is that a big bank in Austria, Credit Anstalt, failed in May of 1931, and it had been forced by the authorities then to take over a lesser bank in Austria or Germany. Didn't want to do it. They're forced to do it. And then the contraction continued, and the failure was in May. So that then gave a big news story for the contraction that started in September of 1929.
We'll have more with Bob Hoye right after this.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Bob Hoye. Bob, the second question from our good friend Frank in Belgium. In 2012, there was a European financial storm developing, but Super Mario, the nickname for the governor of the Bank of Europe, took its Whatever It Takes program. It was a game changer for the markets. It was the start of a covert bailout of the illiquid, insolvent, irredeemable, or otherwise. It transformed Italian and Spanish debt from favored short to the buy of the century and ignited a massive rally in stocks. When I look at Europe today, I still see a slow storm in an over-leveraged private sector, billions of non-performing loans, and undercapitalized banks, all in the face of a central bank that still buys sovereigns and corporates as fast as it can to keep the storm contained. Do you, Bob, see a similar European financial hurricane coming, and can one be avoided?
Right, Frank, that's a good one. Yes, there was a sovereign debt storm in Europe in 2012, and it ran its course. And then, of course, that's what then prompted the head of the central bank to say that he'd do anything to. So they got on board and bought a lot of bonds, huge amounts, drove interest rates not just down to zero, but to minus. And but financial markets have a pulse of its own. For whatever reason, the bull market in bonds and stocks has continued. But what you have now is that in the summer, and using the New York Stock Exchange numbers, we've had sentiment and momentum numbers generated that haven't been seen since 2007 or in 2000. So the market had to continue up until there was enough excitement. And the excitement, of course, has been called the Trump rally, and then it also has brought the general public in. And you can't really have a bull market peak until the public is in, and the public is now in. So, we've got excesses. The way we look at it is you have a question. You say, is the stock market up when it should be? Yes. Through the summer, with the U.S. market maybe rallying into September. And this is going on. The other part of the favorable action through the summer was that industrial commodities were likely to be firm, as we've been saying, into August. And it's made it. We're just barely into August. And then the other question is, are there signs of speculation? Oh, yeah, that's their sentiment, and market technicals are at the moon. And then the third one is, how sound is the story behind the bull market? And they've got good employment numbers. There's a large part of the excitement is due to the prospect of Trump being able to reform politics in the U.S. such that the state's take out of it is diminished and more profitability is in the hands of the private sector. That would be a wonderful reform, but the story is in the market. But the actual reform is being stalled out. Too many Republicans don't want to see reform. So the market is vulnerable, and what we would look for now is the second phase of widening credit spreads. Not yet, but maybe next week. The other one you'd want to see would be a firming U.S. dollar, and the action today so far has been interesting. It was down and sharply rallied, and then now it's kind of dithering around. But there's been a sharp rally in the U.S. dollar today, and on our research, we would hope to have had it at a certain level by Friday's close, so that on our weekly technical stuff, you can get the proper signal. So we really don't know until next week, but the markets are fully priced for a wonderful world that may not be there. Also, this bull market has been going since 2009, and there's some other timing things there that suggest an important top. The time from a commodities peak to a peak in the stock market can often be 9 years, and we've got that now because back in the 1920s, the commodity peak was in 1920, and the stock market peak was in 1929. That was the 9-year thing. And even with the first big bubble, the South Sea bubble in 1720, that one, you had the peak, a major global peak in commodities 9 years earlier, and then the very first bubble blew out. And that's basically the pattern on all of them since, is 9 years after a huge peak in commodities, and you can have a similar speculative peak in the stock markets. And while the stock market gets the most attention, underneath it is something that's more important than the stock market, which is the action in the credit markets, and generally supportive action in the yield curve until recently, and supportive in the credit spreads, which is the difference between high-grade bonds and low-grade bonds, has been supportive until recently. So we're just looking for, in the credit spread department, one more move to widening, and this same pattern worked for us in the summer of 2007, and then you had the stock market high in that October. Then going back to 2000, the second breakout on the turn to widening credit spreads was in the middle of March, and that was coincidental with the peak of speculation in the furious dot-com bubble in March of 2000. And so we're now looking for the second breakout in the turn to widening. It's not happening this week, but we're watching for when it does happen. And it will be as important as it was in 2000 and in 2007. We just don't know whether it's going to lead as in 2007 or would be coincidental as in 2000. It'll be fascinating, Jim, to see how it all works out.
Bob, thank you so much for chatting with us.
Hey, it was a good one.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. You can forward questions for the show or our guests like Bob Hoye to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.